What's up, everyone? It's Scotty with Money Vesting. Welcome on board for yet another market open live stream. I have been away, but I will try to get through today with the live stream. So just give me a thumbs up if you guys can see me and hear me. We should be all set. We got the QQQ ETF slightly higher, up over 9 basis points right now. The SPY ETF is also up over 8 basis points, and we got the Dow Jones just about flat, up over 3 basis points so far on the day. So thank you so much for joining, everyone. Welcome on board. So the thumbs ups are good, so you guys can see me and hear me. Perfect. Got the volatility slightly higher, or just about 17 basis points, pretty much flat so far on the day. We got oil prices now starting to get a little bit of rejection from that resistance here. So we got Brent getting rejected at $80 a barrel, and we got crude getting rejected at about 76.85, 77 dollars a barrel right now. That is going to be somewhat of a resistance to watch for Brent and crude. And we got cryptos selling off still. So that, yesterday was a pretty brutal set-off with the Bitcoin dropping over 6%. Right now, just consolidating sideways. We are seeing some type of recovery here intraday. And then we got Ethereum just testing that support at close to 3,700 as well. So perfect. Thank you so much for joining, you guys. I will let a few more people join in before we start breaking down some of the individual companies here. So let's take a quick look on the charts. So S&P 500 obviously with a big breakout a couple days ago, up over 1.3%, but just from lows of 45.20, it's been on a complete rally of over 5.7%. So very, very nice move to the upside. Validated that 100 simple moving average, so that 100 MA, the white line you guys see on the chart, perfect validation of those levels before getting a breakout from this resistance to new all-time highs. So but this is happening on lower volume, right? So the volume has definitely been kind of pulling back a little bit the last few days, and we're still pushing higher. So volume is a little bit low. We'll see if these gains continue to kind of hold up, or if you see any type of the pattern kind of fading away. Nonetheless, this has been a very nice sort of uptrend for the S&P 500 in general, and every time we've seen a more than a usual dip for the market. So if I bring up the chart here, let's just delete everything and bring up the 21 EMA, actually the 50 EMA. So you'll notice that every time we've bounced off of that 50 exponential moving average, it's been a nice uptrend, but every time we've broken down, we've come down to that 100 moving average. That's the white line you guys see on the chart before bouncing higher. We haven't quite tested that 200 SMA in a long time. The last time we were there was back in June of 2020 as well. So that's kind of like it for the S&P, and the Nasdaq obviously is somewhat retracing back up to all-time highs. We're just about less than 3% away from all-time highs, so we are still in that dip category right now for the Nasdaq, and we're literally there. So it's not like we're seeing a huge correction or a dip or a pullback or a crash. It's just that we have a nice recovery back up and spitting distances away from all-time highs, and the S&P is literally at all-time highs right now. So strong close into the year for 2021 from the markets. Nasdaq's up over 22%. S&P 500 is up over 28% as well. So, all right, let's take a look at some of the individual stocks here, and then we'll also open up our 4 split screen, which is going to be over here. And then we'll open up some different companies, go over different stocks here for you guys. So Tesla right now is up close to 94 basis points, and there was a catalyst pre-market that Elon Musk is now for real done with the selling and no more stock sales coming from him. So I think that might be a good catalyst for Tesla stock now. We're just under $1,100 right now. So we have been selling off a little bit from pre-market from $1,115 down to just under $1,000, $1,100. So just about a 1.5% pullback. But Apple flat. We got Nvidia just slightly down. AMD is slightly down about 27 basis points. Let's take a look at some of the Chinese stocks here. So Chinese stocks yesterday, again, we're selling off with DD slightly higher, but we had NIO down over 1%. Li Auto was down 20 basis points. XPeng was down about 1.5%. Alibaba was down about 1.5%. JD.com, 10 cents. So all the Chinese stocks pulling back, which is not new information or not new news. Let's see. So let's take a look at Microsoft. So Microsoft does have some type of a triple top. You're right. So we have gone rejected at that level like 3 times now, like twice in the past. This is the 3rd time we're actually testing this level. So it is a very, very strong resistance here for Microsoft that we need to watch very carefully. So that is going to be set roughly in the 344 to 345 levels. So lots of consolidations there. Same pattern with Google, right? Lots of consolidation sideways. It's just been moving in a very range-bound pattern. And same thing is true for a lot of different companies that are right now just in a very range-bound pattern at the moment. PayPal, same story, just lots of consolidation. Not really much for us to go over other than just patiently wait for PayPal to make the next move. Resistance is going to stay put at close to 197. Support level is going to stay put at close to 180. So that's pretty much the analysis on PayPal there. So, all right, let's see. So yeah, just leave me a comment if you want me to go over any stocks, and I'll definitely pick, if there's any interesting tickers that we can go over. What do the thick yellow bars represent? Well, those are yellow thick bars is just a sketch. So you can actually draw whatever you want with this sketch over here. So it's nothing really. I mean, I can just remove that, but that's just my way of representing that there is a important level to watch, which is a resistance here. You can just delete that as well at 197. That's a resistance at for PayPal at those levels. So that's that. Let's take a look at Mara as well. So Mara obviously has been selling off quite a bit. Can't say quite it's been selling off, but it was up over 11% on this day. Then it was up over 3%. Then yesterday was a pretty brutal drop over 10.8%, which makes sense because Bitcoin was down over 6%. So if you come over to this watch list, Bitcoin, Ethereum, everything was down yesterday. So Bitcoin pulling back a little bit close to over 6%. It goes without saying that Mara obviously was dropping as well because they're very highly correlated with each other. And right now, pre-market, Mara I think is down over 1.5% because Bitcoin is down about 0.5% at the moment. So we're down just about 1%. So, this is, as I mentioned, this is a very volatile and risky play to begin with. In general, all crypto-related stocks, mining stocks are. So if you're not comfortable with that volatility, if you're not comfortable with that risk, then, there's plenty of other opportunities in the market. So you don't have to just take advantage of this. But for me, I will just continue the all-cost average because I'm bullish on Bitcoin in general. I do expect a recovery very soon, but, we're going to have to kind of see some vulnerability to Bitcoin before we get up there, right? So $43,000 is still very much possible. A breakdown below 43,000 is still very much possible. So those are some levels to consider moving forward because Mara obviously will be affected by that sell-off. So, all right, let's take a look at Facebook, we've already gone over. C Limited, let's take a quick look on Facebook and then we'll go over to C Limited. So Facebook also has a resistance at close to 351, 355 levels. Actually, this should be moved up. So 353, 355 is that resistance. So lots of consolidation for Facebook as well. So PayPal, Facebook, Google, Amazon, we got... What was the stock that we were looking at earlier? Another one that was consolidating. Microsoft, right? So they've all been trading in a very range-bound pattern. They've just been consolidating sideways. And the same is true with Facebook as well, right? We got rejected at this resistance at 353. We got up to as high as 352.71 yesterday before the sellers came in. And in other words, that's the longer wick to the upside on Facebook. So there is some pressure coming in from the top for Facebook right now. Support level is going to stay put at close to $308 per share, at which point I will be a buyer once again for Facebook. I have been building out a bigger position in this company. My plan is to continue the dollar cost average and buy more if it comes out under 325, 310, 305, around those levels. So right now, resistance here going into next quarter, once earnings season is back up, I wouldn't be surprised if Facebook does get that breakout eventually back over to 353 to possibly see back up to 385 or all-time highs. Once again for Meta. So that's that. Let's take a look at C Limited. So ticker symbol SE, and C obviously has been selling off quite a bit from all-time highs. We are down a little bit over 42%. Year to date, the stock is still up close to 9%, although giving up on majority of its gains after the sell-off. This kind of reminds me of CrowdStrike as well. Very similar pattern, but a nice uptrend, nice higher highs and higher lows, but a big drop here recently for C Limited. Given how high the valuation was, I think it's more than justified for the stock price to come down. After this 42% drop, it's come down to 14 times sales. 168 times cash flow, and enterprise value to EBITDA is still negative because they've got negative EBITDA right now. So, and again, price to earnings we don't have because the company is not generating any earnings or net income yet. So again, net income, price to earnings is price over earnings per share. Earnings per share is net income divided by total shares outstanding. So support level right now technically is going to be $204. RSI MACD is still very oversold at the moment from a weekly time frame. So we just need to wait for the selling pressure to exhaust and let the buyers kind of step in and see some type of return reversal, some bullish confirmation before we can start to dollar cost average or buy C Limited. I do like the company and what they do, but valuation is still really high on the stock. So that's that. So Romeo, Mara, we've already gone over. Romeo, Tesla, we've already gone over. So Tesla, Mara, were already covered just a few minutes ago. So you can kind of go back and check those out. AMD thoughts today. I was considering dollar cost averaging at 150. So Advanced Micro Devices, I really like. It's a company that I do plan on holding for a long time to come, as they continue to kind of battle out Intel and those specific markets. But AMD, similar to Nvidia, does trade at somewhat of a premium valuation, right? So I'd be very careful where you dollar cost average in. There's nothing wrong in dollar cost averaging a little bit or nibbling in at 150s or 135. But if you were to ask me, we were buying in the 70s, we trimmed in the 140s, in the 150s. If I were to be a buyer once again of AMD, I would be more interested at 110 or $100, right? At lower prices for better deals, right? That represents more upside, more opportunity, more profit potential for a company that's very strong in the semiconductor space. So lower the price comes down to, lower the risk gets, higher the profitability, higher the margins for profit in the future. That's just how simple it is, and it's simply math, right? We're not making stuff up. It's simple math, right? So if it does come down to 110 and goes back up to new all-time highs, that's a 48% upside versus if you were to buy at 135 and it goes up 23% upside, right? So I would be personally more excited about 110 and closer to $100, but 150 you could like nibble in a little bit if your long-term horizon is on AMD, for years down in the future. And of course, down to 135 as well is a decent support for Advanced Micro Devices. Let's see. So Pinterest obviously has been coming down as well. So Pinterest is also one of those companies, very similar to the high growth, higher multiple names that have been selling off with this, fear around rate hikes. Again, I want to be very clear that interest rate hikes, yes, in the short term, they sure can provide a lot of volatility. They can create a lot of vulnerability in the markets, and short-term pullbacks and corrections are possible when interest rates start moving higher because that freezes up the liquidity. We've gone over this several times. However, it's only a short-term catalyst. It doesn't translate over to long-term systemic weakness in the markets, right? We've talked about this before as well, and how every rate hike has actually also benefited the S&P 500 because inflation's come back down, right? Yes, in the past, inflation was not really that high, but I think going into 2022, one of the biggest themes is going to be where inflation is, right? If inflation continues to go higher, that's going to provide more fear around the markets. But if we get those couple reads where inflation starts to come back down, it's back under 6%, 5%, 4% as interest rates start going higher, then I think that in itself on a net basis is going to be positive for the markets and not a negative, even though interest rates are going higher. But if inflation comes down, I think that's going to be a positive for the markets, which is over the long term is going to do, the markets are going to do well. So I'm still bullish going into 2022. We may not see like a 25 or 30% or 50% gain year next year, like we've seen over the last couple of days, but I still expect a nice average year, about 8 to 10% from the markets, and that's going to put us roughly around 5,000 points on the S&P 500. Now for Pinterest, some of the higher valuation names, those are some things that we need to be very careful of because higher valuation does get hurt, and it does take longer to recover because if interest rates continue to go higher, their present value, future cash flows are worth less as a result of valuations compress. So for Pinterest, support level is going to stay put at close to $34 to $35. That's a level to watch. I think on a forward basis, Pinterest has now come down to some very attractive levels, which is why I don't think we're seeing a lot of selling pressure here for Pinterest, and I do expect some reversals very soon because we've got lots of gaps to fill. We've got oversold RSIs and MACDs, so wouldn't be surprised for Pinterest to also rally higher. But again, not like huge expectations for us to see back up to $90 to $100 per share, possibly up to $60s or $55 per share for Pinterest in the future. So that's that. Let's take a look at FuboTV as well. And then we'll kind of prepare for market open because we got less than 5 minutes left. So Fubo was down a little bit over 5.5%. Yesterday, Fubo, I think, continues to be one of the stocks that is highly shorted. Another thing is short interest. There's a lot of stocks that are being shorted in the markets right now, north of 15, 20, 30, 40%. And that's also causing a lot of weakness for some of these small cap names, right? So Fubo TV only 2.4 billion in market cap, $15 to $16. Anything inside this green rectangle, you do already see some buyers stepping in and a lot of back and forth between like the buyers and sellers for Fubo TV right now. But fundamentals continue to improve, right? Revenue's been on a strong triple-digit growth. Subscribers are crossing over 1 million. The only issue with Fubo TV is the actual bottom line, right? The top line's perfect. The bottom line's that much worse because they're spending more money that they're bringing in, and that's not a sustainable business model to be in. And I think the costs that they're incurring are 165% of revenues. So that needs to be figured out and ironed out in the future. EBITDA, cash flows, and earnings, those are three things that still need to be generated by Fubo TV, which are not quite present. And I think that's what is the riskiest part about Fubo TV. But on a top line basis, on a subscriber basis, the company remains very strong. They've got potential for some other integration with advertising and sports betting along with streaming. So I like Fubo TV where it's at. And of course, if it continues to sell off even more and more, the valuation of price to sales basis is not that high. It's not that ridiculous. So I would be like more inclined to kind of building out a slowly and steadily buying more shares of Fubo TV. So Palantir. So my expectation of a price target on 2022. Unfortunately, I don't have a price target of 2022 on Palantir, so I can't give you that. But I do have a price target out 2026, I believe. I think. Or 2025, whenever they've got us to a $4 billion revenue run rate to about a 30% compounded annual growth rate. So I've got a price target of $50 on Palantir, but that's also 5 years out. And but I don't have a price target on 2022. I would have to do some more analysis. It's not going to change all that much in my view because, given how high the valuation is for Palantir, the fundamentals certainly need to catch up dramatically in order to fit into that valuation right now because the price of sales, price of earnings still remains really high for Palantir at the moment. So trading right at support at $18. Obviously, that's a support level that's been validated coming in from May 21. That was right by the earnings before pushing higher. Palantir looks like a China stock right now. It does. It definitely does. It has been selling off quite a bit from recent highs down about 35%. From all-time highs, it's down a little bit over 58%. But they're both for different reasons. Palantir has been selling off because of a higher valuation. Chinese stocks have been selling off because of all the regulatory scrutiny and the risk over from other parts of the world as well, from US and whatnot. So different reasons, but obviously they've been selling off. And year to date, these Alibaba and of course Palantir and other Chinese stocks are also performing very poorly, with Palantir down about 21%. All right, so we got about less than a minute left. I'm going to open up the Nasdaq actual index and the Dow Jones here, and we'll take a look at how we do. So let me know what you guys think. What are your thoughts about the markets today? Red or green? What do you guys think? What is everybody thinking? We got about Wednesday, Thursday, Friday, so 3 more trading days left to close out a very, very strong 2021. And I'm excited for 2022. I'm excited to see what the markets bring in terms of. So all right, we got a lot of greens, few reds. Dolphin says big red today. Sanju says definitely green. That's why I love the market. It's like no two people can agree on one single thing, right? Everybody's got different opinions. Everyone's got different analysis, and that's incredible about the markets, right? If you think about it. If you really think about it, that's amazing how one stock can have millions of different opinions on different days and different time frames. All right, so off we go. Again, we got the Nasdaq slightly higher. We got the S&P up over 6 basis points, so just about flat. We got the Dow flat, just up over 4 basis points. The Nasdaq is up over 8 basis points as well. So China green, please. Yes, hopefully we see that. But there we go. So we got Apple up over 26 basis points, just under 180 right now. Nvidia is up over 32 basis points. Tesla up close to 1%, 1100, so back over 1100, and AMD is also green, up over 153.56 right now. So far so good. Starting off on a decent note. It's not like we're super red or super green. It's like we're starting at flat levels, and then we'll see if we catch any bids here, trading upward. So Micron up to just under $95. So Micron has been one of the stocks that's been super undervalued ever since it's been trading at $69, $70. So it's a very, very nice 43% rally. Next resistance is going to be right here at close to $96 to $97 per share. That is going to be a resistance level to watch for Micron. Support level at $87 per share right now for the company, right? So it's got decent support and resistance at $96, $97 per share. So that's that. Look at that. Look at Apple go. So up over 0.5%, back over 180. We got Nvidia up over 0.5%. AMD's up over 41 basis points. Tesla, just about up over 82 basis points as well. Is this a good place to buy Affirm? Let's take a quick look at Affirm. So AFRM. So Affirm support I have is at $84, $85 per share. I've actually not done the proper fundamental analysis on this company yet. I do know that they partner with Amazon on buy now, pay later services, but price to sales at under 30 and price to cash flow at 160. So I would not be touching this anytime soon, unfortunately, because the valuation is extremely high at the moment. So support level $85 is going to be the level. And that's one of the things that our community is focusing on going into next year, is fundamentals and valuations. I think that's our theme for 2022. That's my theme. Obviously I don't want to put it on other people, but that's my theme, is fundamentals and valuations, focusing on companies that are trading at reasonably low valuations. Prices are low relative to the value. So in other words, you can pay less for a lot of value that you can get from that business. And we're going to look at the companies as a whole, not just on a stock basis, but looking at companies as a whole. That's why market cap is so very important, because if you were to buy that whole company today, that's how much you would be paying. And are you comfortable with that versus something else? What type of valuation is important to you? I think that's going to be really important once interest rates start going higher, because like I said, present value, future cash flows is going to be that much important. Is going to be worth a lot less when rates start going higher. All right, so we got the Nasdaq still up over 15. You got the S&P up over 12, and the Dow Jones up over 8 basis points. Let's take a look at Bitcoin. So we are just about as flat as it gets, just down about 18 basis points right now. So Mara should be doing okay. So down just about 1.5%, under $35. There's a very strong support in the $27 to $30 per share for Mara. So 27 to 30 right here, kind of aligned with this ascending support, higher low, and this previous support level that we validated a couple times as well. So anything under $30, anything under 25, even at close to $20 per share, which is again possible right here. That's the horizontal support validated previously here. I would be a buyer of Mara very, very aggressively. And again, I will continue to kind of build out a position, but of course not too much and not overexpose myself in this, because it is a Bitcoin related stock, which is very volatile to begin with. Hi, Gaddy, you look better now. The sun is in my eyes. All right, thank you, appreciate that. Happy New Year to you too as well. Remember me, Hall City? Oh yeah, Michael, welcome on board. I'm sorry, man. Hall City, really? Come on. I'm just kidding. No, that's a good team. All right, let's take a look at Fiverr. FVRR. So Fiverr's next support is at $101. Valuation was really high for the company, and that's one of the reasons why we exited when we did. But $101 is going to be that next support level to watch for Fiverr. So Micron broke out of over $95. Well, just under $95 right now. This is a resistance level to watch for the company, right? That's just going to be 96 or $96 per share right there. Previous resistance where we have gone rejected. Oh, look at Tesla, down now in the red, down about 30 basis points, now under 1100. Look at AMD with a big selling pressure here. 1 minute candle. Yeah, it popped up and then really rolled off and just faded, absolutely giving up on most of those gains and down about 20 basis points now. Nvidia still somewhat holding up, Apple holding up, but it seems like we are now starting to see a little bit of momentum shift from green to over to red here. PayPal's still somewhat green. Mostly the markets are flat. There's not really anything that's down a lot or up a lot, right? I mean, the most down we have is Moderna, down about 1.7%. We got Trulieve down about 3% here. And the stock that's up the most is GME. So GameStop is up over 2.2%, and then followed by Micron, which we already covered. Um, and then AMC also up over 1.5%. So some of those ones are definitely green, but overall it's a very, very sort of flat day. Salesforce flat on the day, nothing really. 235 is going to be that support level right here. You'll notice the volume's really been dropping for across the board for the markets, right? SPY, I mean, take a look at this week. It's just been dropping, right? This week and last week. I mean, provided last week was a short week anyway, but I mean, the volume has been dropping, right? Same thing with QQQ. Look at the volume drop here. It's just crazy how much the volume has dropped going into like towards the end of the year. I think that's true for many stocks. Let's take a look at Microsoft. Yep, so volumes really dropped. I mean, yesterday was such a low volume day. Only 15 million shares traded versus 30 million. That's a 50% cut on volume for some of these companies. Amazon was actually not bad. Amazon was decent yesterday. Apple was also okay. It wasn't that bad, but overall, I feel like the volume's just really been dropping over the last couple of days here as we close out the year. And Salesforce, we got a support at close to 235. So 235 is going to be that support level to watch. Whereas Santa small caps got cold for Christmas. Yeah, I feel like they've been really bad all year long. But small caps, mid caps, you can make an argument that some of them were trading at somewhat of a higher valuation, higher multiples. So it takes time for them to recover. Some may never recover, unfortunately. Some may recover faster. Some may recover sooner than others. But overall, that sector has just been beaten down very aggressively, right? Those are including your FuboTVs, your DraftKings, some of those companies that have just been absolutely on a consistent downtrend here. But we'll see which ones are the winners going into next year, because I think there's plenty of opportunities in small caps to be taken advantage of. Russell 2000 ETF has just been flat for the most part since January of 2021. So year to date, this thing is still up over 13%. Had it not been for this rally of close to 6.5%, it would have been like just up over 6%. That's it. So this was a big correction of 14.5% for IWM. But for the most part, I mean, this has just been very range bound, right? Just been lots of consolidation here sideways. That's it. That literally has been on a zigzag pattern since the beginning of this year for Russell 2000. That being said, where were we? So I was quickly going over Salesforce. So yes, support 235 down to 210, resistance at 267 for the company. PayPal, we've already gone over. Let's take a look at DoorDash. DoorDash, I don't think I have any analysis on this yet. So support, we're going to mark very quickly, roughly around these levels at close to 136. So a couple times we validated this level, once over here. Another time we kind of bounce off of that support here. And resistance near term at close to 170 right now. So we have gone rejected at that level a couple times in the past. So let's take a look at some of the moving averages as well. So 50, we got the 100. So trading below all the moving averages right now. And earlier you will notice that we were validating perfectly the 50 EMA. So that was the yellow line. So boom, bouncing off of that level before we got that breakdown. And right now that 50 EMA sits at 177. So as we kind of develop more prices, wouldn't be surprised if this comes down to 170 or lower. And that is going to be a resistance level to watch, and support level close to 136. There is still no bullish divergence forming. So RSI is still making lower lows as with the price making lower lows as well. So no bullish divergence yet. All right, so let's see. Let's take a look. Palantir is falling. Okay, so Chargepoint. Let's take a look at Palantir first. Down about 1.24%. Not a big deal, really. I mean, it's normal. Anything between 1 and 2%, I feel like is normal for the markets. When we from a correction standpoint, when the markets come down over 8% officially on a correction, that I think gets a little bit more serious and interesting. And for a stock, when it's down over 15 to 20%, I would say that's when it gets more interesting. But anything like 1, 2, 3% or like that, I don't think it's a big deal. Especially if it's from all-time highs, but even on an intraday basis, I think that's very normal, considering how volatile the markets have also been. All right, so I feel like my watch list has turned more red than green. Micron's still up. However, we now have more stocks that are in the red. Alibaba is down about 1.9, almost 2%. Pinterest down over 2%. Fiverr AMC, so Tattooed Chef is down to 15.61. Let's take a look. AMD, we got Twitter, Square. Vertex is slightly green, so 222.50. And yeah, so only stock that's up is Micron, up 2%, and Qualcomm. So a couple semiconductor companies that were undervalued are still doing okay on the day. Is Mara absolutely getting destroyed right now? Not bad. Just down about 0.5%. Not bad. We actually added some more Mara this morning, pre-market. Added some more. We'll continue to buy if it sells off. All right, let's take a look at SoFi. So how's SoFi doing? So we are down about 2% for SoFi. Support level here at close to $13, close to $14 per share. That's going to be the level to watch. And resistance at $25. So lots of consolidation here for SoFi. ChargePoint getting a bit of a breakdown here. Below this level, there's just going to be another support to watch right here, close to $17.65 for the company. So right there that we have validated in the past is going to be that next support at close to $17.75, $17.50 levels for ChargePoint right now. Matthew says 2022 our year. Yes, it will be. It will be a great year, I think. So 1770 is going to be that next support that we validated coming in from October 6th, all the way down to $16 per share. ChargePoint also trades at somewhat of a rich valuation. Again, price to sales is high at 38, so be mindful of that. Enterprise value to EBITDA negative 32 because we don't have a positive EBITDA yet. We don't have a price to cash flow, price to earnings because we don't have some of those metrics. But price to sales alone at over 38 is incredibly rich for the company. So not surprised that the company's been selling off a little bit. It had a lower high resistance as well, so it's got a descending triangle right now forming as well. So this is the lower highs that we have just been getting rejected at. So consistent sell-off here for the last few weeks, 38, 39% down. Support level near term 17.75. So 2022 bear market starts. That would actually be a great year for puts. That's good too. I mean, honestly, if we see some more deals, think about it this way, right? These are all assets, right? Stock market is just a place for a lot of assets, right? These are cash flowing assets that you can buy at certain prices, right? Apple is just not Apple. It's like an asset of a stock that you can buy with a certain yield. And if the markets, like some of you are, suggesting that the markets are going to be in a bear market next year, or we're going to see a crash, or it's going to be a great year for puts, that is going to be actually a better thing for the markets because number one, as we continue to do our day-to-day jobs or whatever you're doing in life, as you continue to bring in that income and the markets remain low and they remain at these discounted, at these suppressed valuations, at these prices, that gives us the opportunity to continue to buy at lower levels. And as a result, our margin for profit increases, right? Maybe next year the markets don't have a positive year or they don't gain 20, 25%. Next year the S&P 500 may not go that higher, right? So we've already talked about what the targets are from Wall Street. So if you take a look at this, you will notice that many of them are actually bearish on the markets for next year because as of 47.25 target, we had price targets anywhere between -7% to as plus 12%. So there's not a lot of optimism on Wall Street for S&P 500, and we don't even get up to like the gain territory up until like UBS or Barclays, right? So 4,800 is where we are. So basically, there's two analysts or two strategies that think the markets are going to go down. There's a couple of strategies that think the markets are going to stay the same, and then Citi at 4,900 is when we really start to see some reasonable gains from the markets, right? 4,900, we are going to be 2.5%. Even then, it's like 2.5%. Like I said, the highest is 12%. But if the markets stay down, if they come down, if they remain down, I think that's going to be a good thing. It's going to be a healthy correction, and that's also going to be giving us the opportunity to continue to kind of buy more and more and more at lower levels. I think that's the whole point of dollar cost averaging and investing for the long term, is that you don't think about the day-to-day fluctuations. I know as humans, we do get fixated on the markets and what's happening on an everyday basis, but we always got to remind ourselves that if you zoom out, if you take a look at the overall trend of the markets and where the valuations are, where the earnings are, because earnings are still strong, right? Anywhere between $173 to $200 per share of earnings from the S&P 500 is good, is very good. And it's not like implied P is super high. We're just at 19 to as high as 26 levels, which I think is more than in line with the range where we have traded before. So it's not like it's an overvalued market. I think it's fairly valued given how quickly the earnings are growing for some of these businesses. So I think that's a very reasonable estimates. I think it will be over 5,000 points, and that's going to be roughly 6 to 8% for the market. So over 5,000 is going to be just under 6% for the S&P 500. So that's that. So January month, first half will be jittery. Yep. So first half of the year, in my view, could be volatile in general. Second half is when I really start to see most of those gains. And the reason I say that is because the supply chain issues will start to ease. Inflation will possibly start to come back down as interest rates go higher. We'll start to see those effects of those rate hikes in the second half. And of course, inflation, in my view, will start to come back down as supply chain issues and bottlenecks are also resolved. So once those catalysts come in, I think the market's going to see that as a positive and start to rally again. But the first half of the year, I think, is going to be very important because we've got tapering to get through till March, and then we've also got interest rate hikes to get through in April. And then, of course, all over the world, there's going to be some interest rate hikes. Bank of England's already started one, and then European banks are also going to start to do that as well. So each rate hike will hammer the markets down 5 to 10%. Each rate hike, really? So you think the markets are going to be down 35 or 40% from all-time highs? Where would we even be like if the markets were down 50% from all-time highs like right now? So if we drop 50%, wow, we are talking about levels that we have not yet seen. So 50% would put us right back to where we were during the March 2020 pandemic. So all the gains that we've made so far for the S&P will come down to 2,300. Vivian, Caddy, I'm glad you're a lot better than Caddy's away the market decays. Yeah, I mean, I still would be away next couple of days. I do have like certain procedures that need to get done. So I will be away next week as well. And this week I will try to do as many videos and live streams, but once all that is done, and again, I thought that this was the best time to do it because it is the holiday season. You know, the markets are not as active, the volume's lower. There's few short weeks, so that's why I figured, perfect time for me to get certain things done with my personal life. So that's why I chose the next couple of weeks to do that. But starting in January and 2022, we will be back into the rhythm of more videos and more live streams and whatnot. But for the Nasdaq, that's going to put us 7,400 right now. If we see a 54% crash, if some people speculate that. I don't think that's going to happen. I think that's very unrealistic. There will be so many triggers there will be so many halts that will be triggered along the way if you actually see that. But there we go. We got the Nasdaq now flat to red. We got the S&P up over 19 basis points. The Dow Jones really pushing up 24 basis points. The Dow 30 stocks. Let's take a quick look. By the way, one of the stocks that's been doing really well recently is Walgreens. Walgreens is back over $51.65 here. On our position, I think we're up a little bit over 7% on Walgreens, which I know is not a lot, but I'll take it. And you've got 7% on top of a 4% yield to cost for me. And I'm up to I think over 600 shares now, and I will plan to continue to buy 400 more to get my full position built in. I wanted to buy more when it was lower, but I didn't have the funds to do it, but now I do. And I will continue to kind of buy more Walgreens. Hopefully it gets rejected at that $51 resistance and starts to come back down, so I can get a better price on this. But that's kind of like the whole play. Walgreens will continue to add. And for Realty Income Corp, this is another real estate play that we've been buying. So we'll continue to buy more of this as well. My plan is to also get for this one up to almost 1,000 shares, because this one's also got a 4% yield. So pretty good yield between Realty Income Corp and Walgreens. And then of course we got JP Morgan and then 3M. I will also be adding more shares of. So 3M is another one that I'm watching very closely. I will be doing a separate video on them. So I didn't say 50%, I said 5 to 10% each rate hike. There will be recovery after each drop, but a general overall decline in the markets. So yeah, no, I get it. I understand. But rate hike, you have to understand there's going to be 3 rate hikes next year, right? So every rate hike, if you think there's going to be a drop of 5 to 10%, then, you know, one rate hike, 10% drop. Another rate hike, 10%. Look, you know, that's what I was gathering from what you mentioned. But I get it. I understand what you're saying. So Caddy, what is the best? Who's the best CEO in your opinion? Okay, that's a very loaded question. I feel like there's plenty of really good CEOs with their pros and cons. You know, obviously the obvious answer would be Elon Musk, but again, he's not the best either. In other words, like he's a phenomenal CEO, but he's also got his you know, who got his disadvantages as well. Like, you know, of course, with a lot of things that he writes on Twitter. Are some things that obviously not every CEO does. But I do like his vision. I do like his management style. I think Jeff Bezos was a very good CEO, and only strictly on a CEO basis. And then I think Lisa Su is also doing a phenomenal job at AMD. She's been absolutely she's turned the company around completely. Like AMD was nowhere to be found in this race in the semiconductor space, and now look where they are. They're literally just they're worth more than Intel. I think they're almost worth more than Intel. And you know, they're literally just clipping away on more and more market share from Intel. So I think it's gonna be a battle for the next 10 years between AMD, Intel, I think, and Nvidia as well. Nvidia, even though it's a little bit of a different market, but yeah, it's gonna be very interesting for us to watch and how it kind of plays out. But yeah, Tesla is down about 30 basis points, nothing big. And overall, the market seems to be very flat. Now there's a lot of stocks that are down. So NIO's down over 4%. We got Truly down almost 4%. DraftKings 3.75. Fubo's down over 2.3. Robinhood's down over 2.6, under $17. We got Fiverr down over 2.4. It's the same names. It's the same names every single day, right? So Pinterest, Sofi, Palantir, we got Robinhood, Fiverr, Fubo, QuantumScape, DraftKings, Astrospace, Neo, Truly. It's the same bunch of names, right? Roblox. So again, it's some of the higher multiple names. Just keep selling off right now in the market. I think these are also companies that are highly shorted, right? Some of these are. I think DraftKings is, FuboTV is. I know for a fact. Palantir for sure has to be. Some of the highly, I don't know if SoFi is shorted right now. I feel like SoFi is also one of those stocks that's been shorted pretty heavily. Not sure about Plug Power or Clover Health, but they've also been, wow, Clover Health is at 380. I haven't looked at this stock in a long time, but man, what a drop. That's unfortunate. Moderna down about 1.7%, so 186 is going to be that next support level to watch. Let's take a look at Alibaba. Down to almost 110 again. New 52-week lows. Almost. New 52-week lows would be below $108. And right now down another 2% right now. How are Chinese stocks doing? Is this a surprise to anybody? Does it surprise anyone? I don't think it should. XPeng's down 4.5%. Li Auto is down over 3%. Neo's down 4%. Alibaba down 2%. Oh man. Yeah, Chinese stocks. Maybe 2022 brings some greens for this sector. But yeah, Alibaba down about 51%. Is just insane. It's insane to watch. Yeah, just crazy. Some of these ones are just even worse. I mean, take a look at TAL. It's like education group, 94% down year to date. Oh, that is brutal. But Apple just clawing back up over 180. Nvidia, AMD still pulling back, and overall we got the Dow side of the trade, which is more the value side, doing much better than the S&P or the Nasdaq, and the volatility is slightly down. With Bitcoin recovering now, so hopefully Mara is also higher. Well, no, I don't think it is. It's down 1.7%. Interesting. So we'll see if the correlation kind of plays out or not. But nonetheless, just under $35 per share. If you had to choose one individual stock to buy for the next 10, 20 years, which one would it be? Oh man, that's such a tough question. 10 to 20 years, I can't pick one. It's difficult for me. Yeah, it's. I was actually gonna do a video on 3 stocks I would buy and hold forever. I don't know if you guys would like that video, but maybe I will do it. Maybe I will do like a video, and hopefully that video answers your question. Michael, Caddy, do you have a retirement goal? In other words, if I hit dash one net worth age, I'm going to retire. I don't quite have like a retirement goal. For me, like, you know, retirement is very subjective, right? People retire at 25 versus people retire at 65 or 75 or 85. I don't think there's like a specific age. It all comes down to what your personal preference is. I know, you know, I've read stories, a lot of people who make, you know, obviously have lived in the US for most of their lives. Whatever savings they have, they move to Mexico and retire there because obviously the cost of living is so cheap. So you can actually get equivalent amount of quality of life, and the standard of living is still high at a lower cost of living, and you can do that as well. So I don't specifically have like a number or an age. Yes, I have targets, but for me, retirement, of course, I will be working. Like, I don't think I'll ever stop working because this is what I love so much. You know, just trading, investing, and just, you know, working with the community and just doing all the things that I love that I obviously don't think of it as work. And a retirement from this is actually going to break my heart. If I'm not able to do this, I would be actually sad to not do this. So for me, I just want to keep doing it, keep doing what I'm doing. And Kenny wants a Lambo and a yacht. Trust me, if you saw me living, you would not think that I would be a person to spend money on a Lambo and a yacht. I literally just don't spend money on anything. Literally nothing. Over 90% of my income is saved and invested. And then I live on like 5 or maybe 10%. That's it. I barely spend any money. I get frustrated. Honestly, this is a problem with me. I get frustrated when I spend money. I'm like, why am I doing this? And it's a psychological thing. I'm sorry. I just can't. So, all right, let's see. So besides football, I do enjoy just listening to the music, you know, just discovering new music, kind of. You know, those are some things that I really, really like. But yeah, the football, or in other words, soccer, is what I enjoy most. All right, so the markets overall, just flat. Not a bad day, but also not a super exciting or a great day for the markets. And the volume's been lower. We got about 3 trading days now, only 2 trading days, Thursday and Friday and today, left for 2021 to close out. And Mexico is the shit. Yeah, I've never been. I actually definitely want to go. Well, there's a lot of places that I want to go to. So, but next year in March, April, well, I will be in the U.S. again in October, so definitely we'll do like another meetup. We did a meetup in the U.K. With a few of our subscribers. It was amazing. It was fantastic. But we'll do another one in the U.S. very soon when I'm there. Should be there in October. October and November I should be there, and we'll do like a meetup. I'll be there 3 places, 3 different states, and I will definitely let you guys know in Discord, and would love to like take you guys all out for lunch or dinner, for drinks, for whatever, and we'll definitely do that. But yeah, thank you so much, you guys, for joining in. I really, really appreciate that. And like I said, over the next couple of days, I still have some things to take care of. I've got a procedure with my eye that needs to be taken care of today. The last couple of days, they were dilated, so it was like all blurry, so I couldn't see anything. But next week, I've got another procedure to have. So thank you so much for being here. I really appreciate it. And we'll be in touch on Discord. I'll be sending out market updates and alerts, and of course, Happy New Year to you and your family. We'll probably do another live stream tomorrow or Friday as well. But thank you so much for being here. Really appreciate it. Make sure that you do check out the links down in the description below if you want to join. Get access to our private Discord, buy and sell alerts, our the 40% discount on the fundamental analysis course as well, and the 16% discount on Patreon. Make sure that you drop a like, subscribe, and wish you a very green day today. So I'll see you guys in the next live stream. Take